Last month, the NNPC Limited announced its financial performance for the full year ended 2024, reporting a profit after tax of 5.4 trillion naira on a revenue of 45.1 trillion naira. The company described the results, which it shared during its earnings call with analysts, as underscoring a year of strong operational delivery. Curiously, President Bola Ahmed Tinubu just announced his approval for the cancellation of $1.42 billion and 5.57 billion naira, about $3.85 billion in debt owed by the state oil farm to the government consolidated fund. The question is, can a company declare profits without making provision for its debt? In deciding to unilaterally write off the company's debt, being revenue accruing to the consolidated fund meant for sharing, is the presidency not stoking the flames of a long-drawn litigation from the states and local government councils, which are also entitled to these revenues? Joining us to discuss this is Tilewa Adebajo, Chief Executive Officer of the CFG Advisory. Good morning, Tile.
Good morning, Ruben.
Compliments of the season.
Same
Good
to
to have you on the program.
And a happy new year in advance.
Yes, very quickly. When Rotus Odiri was here on the business segment, he quoted, what's his name now?
Tony
Akinsho, who is also in the oil and gas industry. He's a geologist, ex-Chevron, saying that, look, NNPC is not insolvent, that what we have seen is just a reconciliation. You know, government owing NNPC, NNPC also owing government, and then trying to just do trade-off, and that it has nothing to do with the balance sheet. Now, my own view is one of the issues raised in the introduction. One, how about money that is meant for the federation account? The states and the local governments, were they carried along? Because whatever reconciliation the federal government is doing, the federal government cannot do it unilaterally. Two, opaqueness. That people have always complained about NNPC Limited, and that there's a lot of untidiness. Now, all the people involved in all of these processes, what are their rules? Who did not do due diligence? Who did not do that reconciliation before now? And what is the implication of this write-off of such a humongous amount of taxpayers' money? So how can anybody convince us that there isn't something curious about it? That's the first issue. The second one is about, okay, the same topic that we started with, taxation, which the executive arm of government says nothing is going to be suspended. It's going to go ahead tomorrow, January 1. So what are your thoughts on all the surrounding controversies? But let's start with NNPC.
Okay, thank you very much, Dr. Abati. You've raised several pertinent issues. And I think that what is the bane of this government is the fact that they have not been able to sustain their economic narrative. Even when they're doing well on certain economic lines, they are not able to, in a systematic manner, do that. The Minister of Finance and the Coordinating Minister of the Economy sent out a powerful statement over the weekend, just before the markets opened on Monday, which I think was one of the best statements I've seen in terms of giving us an overall idea as to what is happening. But unfortunately, this statement about these debt write-offs on a unilateral basis is a cause for concern, as you've mentioned. First of all, I think we should establish that the president can initiate and endorse policy. But if he's going to do something like this write-off, it has, by law, it has to go through the finance minister, through the FAC for ratification, which you've talked about involving the states. And of course, if you take a look at Section 162, you also see that the National Assembly also has a role to play in this. So there's definitely a federation account issue here that we need to discuss. So I think there's no doubt about that aspect comes into place. The other aspect of this is the fact that you also have within the Petroleum Industry Act, the new one, there are legacy obligations that need to be resolved. And there's also a resolution mechanism for that. And that resolution mechanism is done through the PIA Transition Liability Allocation Instruments and Corporate Shareholder Governance for NNPC. So when the gentleman was making an argument about NNPC and government, who owns NNPC? NNPC is owned by the Ministry of Finance Incorporated and the Ministry of Petroleum Incorporated, and is a limited liability company now that has a board. So what is important for us is that we need to understand what the president was doing. Was it through the liability reconciliation mechanism that he signed this off, or was it through the FAC? Even if he did that through the liability resolution mechanism, he still has to go through that FAC process and the National Assembly for ratification. So it's a question of process. And I think what is happening is that there's a trust deficit in the system with this administration, in the sense that when they do something, where they don't explain it properly and we just think that it's unilateral. So they need to come and explain properly to us under which mechanism did they go through it. And the president signing this thing on a unilateral manner, has it gone through that due process? Has the finance minister run the process? Have we didn't have a debate in the National Assembly. The same thing with the tax. If that legislator had not got up to question the fact that there was a problem with what was passed and what was gazetted, we wouldn't know about it until after it had been passed. So again, that also creeps in some trust deficit, and it seems now they want to ram this whole tax thing down our throats. So that is where the problem is. The reality is that NNPC has serious financial challenges. So I don't know which, if this is the NNPC accounts that I think I took from Rotus just before I came in. And even if you take a look at the basics of the accounts after I review it, NNCT cannot even meet its current its current liabilities exceed its current assets. So that means that it's liquid if you take a look at just the headlines of this. Not to talk about when you drill down to the numbers and look at the receivables and all these debts that they're talking about, which is good because there's a lot of reconciliation. And what a lot of people are not talking about really is the fact that there's still $42 billion that has been unaccounted for. So this is child's play. This is just $1 billion and 5 trillion naira, but there's still $42 billion, which they admit in their statement that needs reconciliation. That's a hell of a lot of money. That's the current size of Nigeria's present reserves.
So based on the things you've identified, Mr. Adebajo, is this a governance issue when we look at NNPC? I know having moved from public entity to it being a limited company, these are some of the outcomes of that. How do we strengthen the process? Because again, and thank you very much for bringing to fore again that unaccounted 40 billion. We're still waiting for the reports from the Senate who have said they were going to investigate and come out with reports around this. But a lot of issues and why there'll be a lot of questions around this is a lack of trust, a lack of transparency and issues around governance. How do we prevent this, number one? Number two is would there have been a better approach to shedding weight, as you've identified by the NNPC, as opposed to it being written off? What are some of your, what's your take on this?
I think the communication is poor, very poor. You see, because like I said, there are two...
communication or nothing to communicate about on that there's...
the NNPC accounts are clear. We know where all the problems are. It's clear, it's in the account, it's audited. We can see it, we can drill down. So what the other gentleman is saying, I don't know what he's talking about, is there. What NNPC owes, you can't say that because you are doing business with government doesn't mean you don't reconcile. If government tells you to pay for something, there must be an account of what you've paid for in terms of the subsidies that you've been doing over the years. So if you do not remit money to the Federation account, then you can resolve it. It's not a big deal. The central bank did it. Borrow a leaf from the central bank's book. When we had all those backlog of FX, they got a forensic auditor, Deloitte. Deloitte came in, reconciled all those things, and the ones that were genuine, they paid. The ones that were not genuine, they discarded them. And we don't have that problem today. So NNPC also needs to do a forensic audit, which I think we need to go through the whole essence in the fact that this is part of cleaning up NNPC. So what the government needs to communicate, first of all, is that within the Petroleum Industry Act, there's a allowance for how you manage the legacy issues and then also how you deal with the federation account. So all these things is the Minister of Finance that is in charge of it. So has the Minister of Finance done the needful? Has the National Assembly done the needful before the President endorsed and we had this announcement? That we don't know. All we heard was that the President unilaterally wrote off some debt. So that raises alarm. So it's a process and governance issue. So when did the board of this NNPC sit the board of this NNPC sit to be able to make this request to the President in terms of their restructuring of their balance sheet? Where were the minutes of this, and was this now conveyed to the Minister of Petroleum, as the President is, to now say do the final endorsement? So those are the sort of things that you need to look at.
And that's the question I want to ask. Does this NNPC with this kind of thing that happened looks like to you like a place that have a board? I mean, because I am...
That's the government's, yes.
I mean, does it look like... Dr. Abati, for those that were attacking you the other day when you were saying NNPC is as good as not having a board, does this look like the NNPC has a board that is working? Because this governance structure is dead. That's number one. Number two, we see them beating around the bush over $40 billion. Can they also please account for it? The third part I would also like to raise is this overemphasis on, oh yes, our reserves are good. But when you look at the state of play of the economy and the budget, even the so-called revenue that is, we've read our revenue target, we can still do a lot of projects needed for the people. I mean, the President said something, the Minister of Finance said something else. What's going on? But does this NNPC look like, is a board sitting?
That's what I'm trying to say. That the communication, they haven't told us this. We don't know. And we will assume that the NNPC board must have done all these things before it was ratified. The way they made the announcement is that the President just woke up one day and signed it off. So, the communication, so they need to come and ask us that, okay, NNPC board met, they did this, and they need to come and give us the details of what happened. But again, we've talked about this is a symptomatic issue you've mentioned now. Revenue. The problem is the government has been pushing a budget that they cannot fund. They have been making projections that they cannot meet. And that is where you see the 30 trillion shortfall that you talk about, that you cannot make a budget based on projections. The last time we had this discussion and we reviewed the NNPC balance sheet, remember what I said? The conclusion at that point was that we need to sell off. Yeah. Okay. The problem of Nigeria is fiscal. This tax thing they're following, the tax reforms are not going to make an impact on the growth of the economy. The problem of Nigeria now is that there is a lack of, we do not see the disinflation and growth strategy that will generate productivity and create employment. That is what this government is lacking. You have succeeded with the reforms. Good. Now, you have the challenge of disinflation. You need to give us a growth strategy that will increase productivity, create employment. The numbers are not trustworthy.
Even inflation numbers.
Unemployment in Nigeria cannot be 4%.
Yes, obviously.
It's impossible. The inflation numbers at 14%, if the CFG Advisory used the adaptive gap method and we calculated inflation currently now to be 23%. So that inflation has come down from the 33% before down to 23%. I would not trust the 14% number. The Monetary Policy Committee does not have the confidence to drop those rates. So Nigeria's balance sheet, for instance, if you go to the Ministry of Finance Incorporated, They said the total value of Nigeria's assets is about 271 to 280 trillion naira. And our debt is 150 trillion. Domestic debt is 80 trillion. Out of the 80 trillion domestic debt, 35 trillion of that is ways and means.
So what is left?
So what we're saying now is that if you net off our assets from our debt profile, we're getting to a stage whereby things are not working.
Because it's getting to,
and you can see that
pressure.
the government itself is suffering on that side. So we need to restructure the federal government's balance sheet. And that's why we say we need to sell down these assets, which I think they've approved the divestments now. And I think that what they're trying to do now is to clean up the balance sheet of NNPC in preparation for more robust things. All these forward contracts they're doing, they need to reconcile that and restructure it and put it into a recognizable and transparent debt instrument.
I also asked about this narrative that was, okay, we have reserve. I mean, does it cut it at a time where we are not even seeing the growth trajectory?
Reserves are different issues. Your reserves are just telling you that you have import cover for 9 or 10 months.
6 months.
So it doesn't
do anything because...
No, it's not supposed to. You see, what I'm trying to say, in Nigeria, we have this fixation. I don't know, maybe it's the politicians.
Yeah.
With reserves. Reserves are there, but that's not the issue. Like I said, it's not your reserves, it's not your reforms that will grow your economy.
Okay.
It's your policies.
It's policies.
Okay, let me ask you about the outlook for 2026. Today is December 31. By tomorrow, by later today, in fact, we'll start celebrating New Year in other parts of the world until it comes to our turn. Now, the CBN has done a document, macroeconomic outlook, economic growth outlook for 2026, and it's positive. They are quoting, I think, 4.9%. The CPP, led by Dr. Muda Yusuf, has also done their own outlook for 2026. They are quoting between 4.0 to 4.5%. But what I find interesting in all of this is the CPP saying that there are other things that we need to consider, which will be productivity, crude oil productivity and volatility, performance of the non-oil sector, geopolitical tensions, reactions to this new tax regime, which could affect that outlook one way or the other. What will you say should be the major concerns as we get into 2026 in terms of the outlook for the economic growth?
Okay, first of all, let me make a statement. 4% economic growth for Nigeria's population of 200 million is grossly inadequate.
I said so earlier.
Okay.
But
so,
even China is struggling with 5%.
Yeah, China, 5% of their own GDP growth is a different measure.
Okay.
Okay, so you want to grow 4% on 250 billion. They are growing 4% on 17 trillion.
Okay, I get that.
You understand that?
I get that.
4% on 17 trillion is different from 4% on 250 billion.
So we need to be growing at least 8 to 10% for us to get impact on our population, which really is the goal. Because, we need to improve people's purchasing power. We're still struggling with inflation. Purchasing power is still an issue. So, fine. Having said that, the CBN brought out a brilliant report, but the bottom line in the review is that they're cautiously optimistic. Not fully optimistic. There's caution, because there's that caveat. And
but that's how these reports are always written.
No, you write the report with caution because
nobody says we are categorical.
No, you can't be categorical. I would like to be categorical in certain things. Okay, and the fact is that what are you doing to deliberately grow the economy? And that's what we really need to focus on. The reason why there's cautious optimism is that the clear and present danger today in Nigeria is the fiscal side of the equation. The cumulative, we have a deficit financing of 24 trillion naira into 2026 budget. It is unclear how we're going to fund that deficit. Cumulative deficit over the last 3 years is close to 50 trillion naira. So we're hitting our debt ceilings, okay? Excess crude account now is less than $100,000. In 2019, our excess crude account was $25 billion, not reserves.
Excess crude
account was $25 billion. That was what saw us through the global financial crisis. Now we do not have any buffers. The Sovereign Wealth Fund that is supposed to manage a stabilization fund for fiscal issues has less than $100 million. That can't do anything. So we have significant fiscal challenges. What also surprised me was that in the president's speech that he put his budget to the National Assembly is a violation of the Fiscal Responsibility Act. So the Fiscal Responsibility Act and the Fiscal Responsibility Commission needs to be empowered to get things done. So next year, the most important thing for us is how government manages its spending and its budget. If the government can do that and cut down its budget, cut down its expenditure.
In an election prelude year.
You see?
In an election prelude year.
Yes, exactly. No, you see, we have to understand that government cannot be like an ostrich and bury your head in the sand and think that we don't know how you are spending all this money. The National Assembly has statutory transfers now of 4 trillion naira. So all these $15 billion a year that we are making from the subsidy savings, where is it going? We couldn't fund the capital expenditure in 2020.
Yes.
25, we've not been able to fund our capex.
Yes.
So if you do not fund your capex, where are you going to make the investment that is going to grow the economy? So that means you need to bring the private sector into the things. So the government needs to look at its divestment program, sell down assets, raise about $30 to $40 billion or more, which they've approved. You need to start your privatization exercise. You need to start your concessioning process because government does not have the funds to be able to make investment in capex. And then we need a proper disinflation and growth strategy that will give us productivity and employment. That is what the government needs to do. So government spending and the government budget will determine the way the economy ends up in 2026.
Just very quickly, I was going to ask. Okay, free, go on.
The sad thing is, all of these things you are saying is good, but this is at a low governance year because we're already election mode. We are going to have the party primaries of all the political parties as we speak, and we're also going to have a lot of election spending, which is number one, going to put pressure on our foreign exchange, our forex, because most of the election business is conducted in US dollars. Two, is going to put pressure on inflation for us. So please, I want you to hazard a guess on how we can prepare effectively and start to buffer for that. Because it's going to be a high spending year. Because as we leap into 2027, it's just going to be election first quarter, that's February. But most of the spending will be done this year.
Well, spending, I think, might boost the economy if it's done properly. So that might not be a bad idea at the end of the day. But the question, like you said, is that the demand on the foreign exchange, I think, is not significant anymore. We have a market-driven system, and I think that there's that availability. So it's really, I don't really think, because we've always looked at all these things and we've seen how does election spending impact elections. I think that we'll have to see, but it's a concern. A big source of concern. Election year, is the spending going to go into the right places? Are there going to be a lot of things? So those concerns are there, especially in an election year. That is the government going to take its eye off its reform program and at the expense of an election? And I think that's another risk for this year.
Definitely.
You see, because if you take your eye off the ball in terms of trying to consolidate on your reforms, we can lose those gains. And that's another risk that we need to face in this election year. That's definitely a risk in terms of, do we lose all these things? And people are going to factor that into any equation.
Very quickly, we're entering the third year of this administration. And this is where we're supposed to begin to see, or the people experience the gains of some of the tough policy reforms, directions by this administration, especially in 2023. How confident are you? Because what we've been talking about, yes, I mean, economic growth, projections positive, outlook positive. They're looking at a downward trend in inflation as well. When would the people begin to feel the impact? 2023. 2026 is meant to be that year?
Well, like I said, I have my doubts. And the doubts I have is not because the reforms have not been done, but in terms of communication and seeing a plan. We need a disinflation and growth strategy plan. I've not seen that. That is my concern. Once I see a disinflation and growth strategy that is deliberate, let me give you an example. We have 3 sugar refineries in this country, owned by Dangote, Boa, and maybe flour mills. Mm-hmm. They're importing raw sugar. They've been doing this for over a decade. How come we have not done the backward integration to get Nigerian farmers to grow sugarcane to supply these refineries?
Insecurity.
That is a plan. Where are the next big projects coming through? We have LNG train 7. Train 8 cannot go ahead because there's no gas. Where are the deliberate projects that are coming through? We need to see projects in all sectors of the economy that we know that can grow the economy, that can transform. So it's a question of coordination.
Yeah.
So we need not only coordination of monetary policy with fiscal policy, but also with trade policy, investment policy, and industrial policy. That is what I haven't seen. Everybody's working in silos, but we need to see that coordination.
Okay, I get your point about synergy and also about strategy. But even when you have the strategy well articulated, how about the implementation and the capacity to follow through and deliver tangible outcomes? That's always where we have problems in Nigeria with our policy formulation and execution process. But thank you very much for joining us.